I see a bunch of familiar faces out here, so thank you for attending. I hope this is going to be very, I guess, informative and maybe provide you a framework of how to look at the problem. And so, allow me to introduce myself. My name is Alejandro Enamorado. I am with ReFed on the Capital Innovation and Engagement team. You might see me on some of the emails you receive. Hopefully you don't pay mind, but you'll see my face probably at the bottom of those emails. What I really focus on when it comes to looking at food waste is looking at it from a lever's perspective. We all know a bunch of them. Policy is an important lever, innovation is an important lever, as well as engagement. And by that I mean with businesses and with individuals. But today we're going to be talking about capital. Capital being one of the, not most powerful, but it is a very powerful lever to try to catalyze change. And that is sort of what I've really been looking at in how to solve the food waste problem. So really quickly, to set context for the landscape that we have today, this slide is overwhelming. It's not meant to be informative. It's more meant to tell you this is what our landscape of food waste is. At ReFed, we look at things from a prevention, rescue, and recycling perspective. And I would say that the whole sector, even if you look around conference attendees, is that we are a diverse collection of individuals and solutions out there. The sector brings prevention, and by prevention I mean this ends up being mostly for-profits, but it'll include some nonprofits as well, and that will cover software, that'll cover logistics technology, logistics providers, maybe even things like shelf life extension. It tends to have a lot of innovation and a lot of research, but that's an interesting area to look at. Another area that we also want to talk about, which is I would say is the lifeblood of the food rescue or food waste problem, is going to be food rescue. And so that is rescuing food and then redistributing it to those that are in need. And lastly is recycling. So if we can't prevent food from going to waste, and if we can't redistribute it to those in need, then we have to find an appropriate way of disposing of it, whether it's through composting or through anaerobic digestion, or making it into livestock feed. So I think the main takeaway that I want to leave with all of you today about this sector is there are so many different models, so many different ways of dealing with waste that it can get quite confusing to say, how do I operate in this space? How do I even fund this space? So when I'm taking a step back about how we created this session, depending on the type of funder that you are, if you're looking for impact or if you're purely profit motivated, you probably have the question of, how do I get the most for my buck, and where can I participate in this mad sector that we have here? And let's say if you're a solution provider, I know a lot of people in the audience today are going to be companies and organizations that are trying to solve the problem. The question changes. The question is, who do I reach out to get capital? Or who am I going to be most appropriate to when I try to make those discussions? And so that is what I'm hoping to answer today with the help of my panelists. I'm just going to click the slide. Hopefully you see that. So right now, actually, I've had the slide here. It's segmented in a different way. I know I presented it as prevention, rescue, recycling, but I think our panelists here today are going to be talking about it from the standpoint of business to consumer, supply chain technology. Then we've got waste valorization solutions, so that is converting waste product to something that can be used. And then lastly is going to be rescue. And so I think that's the framing when our panelists will talk about today. They'll look at it from that standpoint. And so allow me to introduce our panelists that we have today. And in no particular order, we're going to start off with Jenn Louie. Jenn Louie, if you could stand. Jenn Louie is a managing director, at Closed Loop Partners, responsible for their private credit and catalytic investment strategy, mostly focused on impact first debt and equity investments. She looks at projects across North America and specifically circularity of packaging materials. Prior to CLP, she spent 10 years being a managing director or managing debt portfolios. Next is going to be Dr. Anika Warren-Wood, who is an operating partner and chief organizational effectiveness officer at Draper Richards Kaplan Foundation. She's responsible for driving operating initiatives across their whole portfolio, including building culture, team initiatives, board construction, amongst many other things. And she's previously worked at Drexel University, as well as a nonprofit, and actually has a very long storied career that if I were to expand on, we'd be here forever. But we're honored to have you, Dr. Wood. Next we have Ida Posner, a fourth generation leader of her family business. She also invests in rail assets as well as food businesses globally. She's the founder and managing partner of Hawthorne Food Ventures, a venture capital firm solely focused on food waste, which is actually quite the innovation because we don't have any pure play venture capitalists that are out there looking at the problem. And we are also honored to have her on our board. And last but certainly not least, you'll notice we have another Jen on this panel, and that is Jenn Burka, who will be leading our panel today. She is an investor at FTW Ventures, focused on climate solutions, sustainable packaging, as well as innovation in health and wellness. And she previously worked at Evolve Ventures, which is basically Kraft Heinz's $100 million corporate innovation venture fund. And so with that, I would love to turn the mic over to Jen, and we can get this panel started. Thank you, everybody, for coming.
Thanks so much, Alejandro. We're super excited to be here today. To set the scene, as Alejandro said, we're really trying to tell a story about how we think about investing in the food waste ecosystem. And would love to understand who's in the room today before we get started. So just gonna do a couple questions and would love for you to raise your hand. So first off, if you are a early stage startup founder, could you raise your hand? Great. What about a growth stage founder or CEO of a company? Okay. Are there any market rate investors in the room? Cool. And what about catalytic investors? Great. And then I guess everybody else would be in the learning about investment because it's an area that you're not super familiar with. Any hands there? Okay, great. Anything I didn't cover, feel free to shout out. Nonprofits, yes. And any nonprofit employees here? Awesome, okay, great. And then also just one other question. Who is based in the US or North America? Okay. And any international? Okay, great. Where are you all from internationally? Yell it out. Okay, anywhere else? No. Okay, Europe, New Zealand, UK, Netherlands. Okay, great. That gives us some really good context to set the stage. Well, so now I'm gonna get everyone to introduce themselves a little bit more, but I'm gonna give you a question with which to do so. So I'm actually gonna start with Ida. Ida, I'd love to learn a little bit more about why you decided to be the first innovative food waste only investment firm. A little bit about that origin story would be really great.
Thanks, Jen. So I think most of us, and to level set, we've all been here for a full day, so we don't have to do the why is food waste important conversation. So thanks for being here and believing in this, right? And I think this morning was a really good look back into what's happened over the past decade as we've really seen this sector evolve from one that was largely philanthropically funded into something that's really ready for venture investment. And we've seen a lot of growth in not just the number of solutions out there, but some specific companies and just the scale of people looking at this problem. And so one of the reasons for founding Hawthorne Food Ventures was really to meet the sector where it is and to drive more capital into this space where we see the most potential for growth. And that is accelerating these solutions with early stage companies who have innovative ideas and can really take us to scale. And I will say, even represented on this panel today, you know, people have been working on this for the past 10 years, for even longer than I've been looking at it, and have tried to do this, and there's a lot of people who are driving towards this momentum. And I also really wanted to elevate the fact that food waste is an investable business opportunity. It is not just something that's good for the planet and people, though it is, and we love it for that. But there's real opportunity here, and we should be able to prove that. So that's one of the goals of Hawthorne Food Ventures. And I'll also say in the kind of broader food and ag landscape, there's sometimes this question that comes up of, is venture a good fit for ag tech? And I always challenge that question because I think the better question is, what does venture look like in ag tech, in food tech, in these sectors? And so thinking about how can we do venture capital in a little bit of a better way, and by focusing what we're looking at, really, again, meet the sector where it is and provide capital in a way that's not just getting these companies money, but also the support and what they need to really grow their solutions.
Great answers, and I'm excited to learn more about where you guys are investing within the space. But next I want to turn it over to Jenn to talk a little bit more about closed loop partners, definitely one, if not the leader in the circular economy and investing, and would love to hear about different types of finance that Closed Loop is looking at. Blended finance is a terminology I hear a lot when folks are talking about investing in food waste, and would love for you to just illuminate the audience a little bit about what that means and how that might apply to food waste.
Of course. Maybe I'll start with the Closed Loop Partners and who we are. So we are a New York City-based firm focused on accelerating the transition towards a circular economy. We've been around for 10 years. I would think about CLP as being a holding company with 3 distinct underlying businesses. So we have our innovation center, known as the Center for the Circular Economy. We also have an operating business now where we own and operate assets, specifically material recovery facilities across the United States. And then we have our capital management business, or asset management business, where we have 3 underlying investment strategies. I lead our catalytic capital strategy that mainly focuses on providing catalytic loans into the recycling space to solve for plastics and packaging materials and to ensure that those materials stay in circulation for longer. My strategy is complemented also by a venture capital strategy and also a private equity strategy. I'd say the VC and PE parts of our capital management business have a much broader mandate beyond plastics and packaging. And so when we think as a firm about the circular economy, in addition to plastics and packaging materials and the outcomes there, we're also focused on food and ag, food waste solutions, supply chain technologies, and fashion. So think about material science. As it relates to your blended finance question, really think about that as being a structuring approach, as a way of financing businesses and projects. If you think about the investment ecosystem, investors have different investment objectives, they have different risk tolerance, and they also have different return expectations. Blended finance is a way of combining different financial instruments or capital together, whereby you're optimizing a capital stack to ensure that a project is going to be able to service its debt, to meet the return expectations of different equity investors and partners. And its relevance to food waste solutions is that it can really help to de-risk a project and mobilize different forms of capital to help a project get across the line or to meet critical milestones to raise additional rounds of financing. So there's lots of relevance, and I'd say where I sit when we think about catalytic capital is I want to be a patient capital provider that's providing flexible loans, and so taking on a lot more of the risk to allow for the crowding in of more market rate return investors into that said project.
That's great, and I think Ida and I can dive into how we think about underwriting a little bit differently in a few minutes, but first I want to learn a little bit more about DRK Foundation and would love to specifically hear from Anika about how you guys look at international opportunities in food waste and other solutions as well, and how that fits into your thesis.
Sure. Happy to speak to all of you. Draper Richards Kaplan Foundation, we are a global venture philanthropy. So we invest in early stage startups that are post-pilot pre-scale, which means that you've determined what problem you're trying to solve and you've tested it, and we know that your theory of change or your approach works to really have direct impact. We focus mostly on direct impact in vulnerable populations. In our work, we're not sector agnostic, but we look at many of the emerging issues in the world, from food and ag, climate change, education, and onward. I know we're talking about food and ag today, so wanted to just acknowledge that's the way that we work. We give unrestricted funding. We invest in both for-profits and nonprofits. We give $300,000 for nonprofits and 2 tranches of $150,000, which is not a lot of money for for-profits, but they're early stage, usually 2 to 5 years. in kind of development. Outside of the U.S., that money can be even more catalytic just because there's a dearth of funding, even in food and ag. So what else I would say about us is we're U.S.-based. We have 3 offices in the States with our headquarters in Menlo Park, California, but we also have an office in Nairobi, Kenya, and in the Netherlands. I knew someone that's here from the Netherlands today. And we also work in India, so East, West Africa, India, Europe, and some work in LATAM. And then your broader question really is about how do we think about food and ag outside of the U.S.? We think about food and ag very similarly across all of our markets, but outside of the U.S., we're really looking at everything from food deserts and how do we move how people, I'm kind of blending my answer now because I'm thinking U.S., non-U.S., but we really think about it from 2 spaces. We're interested in the end game solutions, but we're also interested in the generation of food and waste and how it's processed and how it's dealt with. So we're looking across the entire supply chain, but we're always focused on who are the most vulnerable populations. Are farmers getting the profitability and getting their products to end market? Are they getting consumers what they need? People who are suffering the most, are the resources available to them? So it's both on a generation of food. We also look at issues like first line cold storage and helping farmers to kind of retain. So there's a lot we're looking at as far as what are the topics and issues, but always dealing with vulnerability and how can we improve all aspects of the supply chain.
Well, I'd love to dive a little bit deeper into what we're all looking for and specifically what types of markets excite us and opportunities we think are the most interesting for our organizations. And certainly the framework that Alejandro had put on the board before is a good place, I think, to start. And would love to hear, as you answer, maybe give an example from your portfolio of a company that you think sort of fits the mold. And I'll actually start. So we invest all along the food and ag value chain. So we're not only looking at food waste, but we are, and I think I think Jenn might have said, or no, I think Anika said that you're really looking for people that have solved that core problem and sort of have what venture capitalists like to call product market fit. But we think about it as a step deeper, because we're investing at the earliest stage where product market fit might not be figured out, but what can be figured out potentially is, are you solving a real problem? And not only a real problem, but a problem that keeps your customer up at night. So during our due diligence, we're really trying to ascertain if you are solving a number 1, a number 2, or a number 3 problem for our customer. And if so, we have a pretty good indication that there's this willingness to pay. And so an example of that is a company we invested in called Fresh Fry. And Fresh Fry is a tangentially food waste company. They're actually not trying to solve food waste, I would say. What they're trying to solve for their customer is restaurateurs that fry food. And that when you fry food, the oil gets dirty, you have to dispose of it, it's messy, there's a lot of compliance issues with getting your employees to clean the oil. And so what they've developed is a really easy to use product that's made from agricultural waste that you drop in the oil overnight, and it extends the oil life an extra 2 to 3 days. So there's a really clear ROI to the restaurateur, and there's this benefit of having this food waste story, both from extending the oil life and from the agricultural waste that the product is made of. But those were sort of cherry on top of the fact that they were solving a real operational headache for the customer that they were selling to. And that's the type of opportunities we really like to invest in. So I'd love to turn it over to Ida to maybe dive into how you guys think about what good opportunities are in food waste and maybe an example from your portfolio.
Absolutely. And I think when we had those figures on the screen, you can kind of visually see it. So we like to first look upstream at prevention solutions. And you saw there was like 5 solution areas within that. It's a big bucket. And that makes there's a lot of impact there, both from a food waste perspective, but also if you can recover resources early on, you're going to save more money, right? So we do love to look at prevention solutions. An area we're super excited about right now is freshness and doing shelf life extension. And that has a consumer pull as well, right? People want fresher food. They want to know where it's coming from. And there's a lot of value capture from existing food waste happening in the supply chain. It's easier to quantify and to see. And so one great example is Strella. And so this is a freshness monitoring company. They've started working with apple growers in Washington State. And fun fact about apples that actually most people in this room might know this because you like thinking about food. An apple that you eat in the grocery store, that could be a year old. You know, apples are harvested during one season and then they sit in storage in temperature controlled environments, low oxygen rates, basically a literal black box, right? And then those rooms are opened when it's time to sell the apples. But there's not a lot of visibility into what's happening in the room. And so that saying of one bad apple can ruin the bunch is true. And if one starts going off and releasing ethylene gas, you could lose an entire room full of apples. So we're talking tens of thousands of apples there. So Strella has put a device in there that can tell you what's going on and start to monitor what's happening inside those rooms. And then track it downstream. So using analytics, actually say, all right, what's really happening with this apple? And even going down to the kind of carton level as you get into a retail environment. So you're taking a data set and you're providing value to the grower, the packer, the retailer, and the ultimate consumer. And so that value capture is really important because you're starting upstream and then you're able to extrapolate that downstream. And I'll also just touch on the other area we do look at for a few examples is recycling. It's a trickier space, and generally we think it's a better fit for a different form of capital, for project finance, and can get really infrastructure heavy. But since we are all here and Mill has a great presence, I have to shout out Mill, which is another one of our portfolio companies, which has just really rethought how we deal with food at the end of its life cycle. And they are a recycling solution that still keeps food in the food system, right? And you are designing something that I always describe it as the food waste solution that you'll fall in love with. They've been able to really connect with the consumer and design a beautiful, functional product that's also having structural change and allowing us to design a completely different system of how we manage our waste at the end of life. So that, from an investment perspective, you know, the core value proposition is it's a recycling solution, and the, you know, additive benefit on top of that is just the engagement you get at the consumer level, who are really falling in love with the product.
And before we move on, I have a follow-up question about Strella, which is how did you figure out which part of that value chain was going to be willing to pay, or how does Strella figure out for that technology? Because that's always been something we've sometimes struggled with the supply chain side of the business, is that a lot of these big organizations have underwrote.
Yeah,
underwritten.
It's a great question.
Go ahead.
Well, and so this is where I get to defer to someone who's smarter than me, which is Katya, the founder, so she was in Philadelphia and started working on apples and said, okay, we need to move to Seattle because we need to be in Wenatchee, because we need to be in the apple capital of the world, and I need to be out there talking to growers, talking to the people who are doing this work. And so I think one of the big things that is a challenge in venture is that it's this industry based on growth and fast-paced timescales, and that doesn't always correlate with a growing season, or an industry that is based on long-term family businesses, generational people doing this work, and then you want to come in and say, well, we need to scale in 18 months, so how are we going to do it? You know, I think you figure out where that willingness to pay is by taking the longer-term approach to really deeply learning about where, to your point, what are the 1, 2, 3 pain points that they're having? And for apple growers to be losing these entire rooms of fruit is just, you can see it, right? That waste is really quantifiable. I think it is harder downstream. We know that there's value in consumers having a consistent, fresh, quality product. That's where the willingness to pay, I think it's there, but it's a little harder to quantify right now. But we can say, like, we can stop you from losing that room of apples, and that's a little easier to grasp.
Yeah, I loved the statistic this morning from the senator, or from Secretary Vilsack about, I think he said over $400 billion wasted, and I think that is the story we need to tell. Okay, I want to turn it over to, I don't know, Anika or Jen, do either of you have a portfolio company you'd love to talk about, or an approach?
Sure, happy to do so. We have about 220 orgs in our portfolio, and about 15 to 20 are food and ag. I was on the board of an organization named The Common Market. It's based in Philadelphia, but since has expanded to New York, New Jersey, Georgia, Texas, Illinois, and onward. So basically what Common Market is trying to do, they're trying to connect communities to nutritious food from sustainable family farms. And it's an entire ecosystem play, and it's quite incredible. They work with poor farmers, often farmers of color, and they help them deal with both everything from reproducing food, getting equipment, getting assets. They then take that food through the entire supply chain to ensure that it gets to some of the most vulnerable populations in these communities and systems. And structurally, they have everything from drivers to trucks to cold storage to facilities to warehouses. And they move through the entire cycle all the way to getting it not only to the schools, but I'd like to talk about an example that happened during the pandemic with Common Market. Common Market realized because they had all the components that they could have a substantial impact on ensuring that families were able to get food that weren't leaving their homes. And in that year alone, they raised $30 million and were able to get over 1 million people food. Since then, they've invested $111 million into the economy of food waste in some significant way. It's a more mature organization for us, but the impact is exponential because it impacts from the farmer all the way to the immediate family and does that through partnerships. So it gets to a lot of the pieces around supply chain, market linkage, and things like that. So that's an org I like to talk about. We also have some outside of the US that are looking at fishery farming, a range of other things that are looking at the end, like keep it cool, things of that nature. So I could go on and on, but I'll pass it to Jennifer or Jen. Yeah.
Thanks. I don't have a specific example to share, but I'll probably just pick up on some of the things that like Ida has shared. When I think about the type of capital that I'm responsible for, it's exactly the things that probably are not a great match for venture capital or venture investors, but I love the idea of being able to finance CapEx, asset-heavy projects, mainly because, or companies, mainly because we do have patient capital, right? And so we can work and really try and, again, like match the product that we have with the cash flow needs of the underlying business, which, again, is pretty critical here. I think the other thing is when we think about, because we're impact-first investors, we are really using this filter of thinking about diversion from landfills and thinking about emissions reduction or avoidance. And once we can prove that out, then there's a lot more conviction from my team and I to want to back something that maybe does not have access to capital early on because of the CapEx intensity and nature of that. And so we're probably, as a team, when we think about the food waste solutions, going to focus more on the recycling, but obviously acknowledge that there are lots of companies coming into the prevention and reuse space that have a CapEx intensity to it, where patient, non-dilutive financing will be a good fit.
Can I jump in? I want to jump in because that is exceptional and completely different from how DRK operates with regards to our ability to have direct impact. Insofar as we think our financial investment in an organization is less significant than our ability to help them with capacity building. Those of you who are entrepreneurs know some of the amazing challenges you've experienced and how you've tackled them. So we look at portfolio support as our deepest and richest investment, and our goal is to help organizations sustain and grow and scale in significant ways. And we do that by partnering around 6 strategic capacity building pillars, all of which all entrepreneurs really need to execute to be able to be effective at what they're trying to do in the food waste space or in any form of ag or anything else we're working on with them. So we look at leadership development, board development, organizational development. Those are the 3 areas that I run across the entire organization regardless of sector. So we see a lot of pattern recognition of issues that people are experiencing and how they can help solve them. The other 3 areas we look at are fundraising, so sustainable, finding lead investors or follow-on funding or working with others to really support the growth of organizations, and scale strategy, helping them figure out what's happening with your scale strategy, what do we need to do to evolve it, and how can we help you find new markets. We don't deal with changing mission and model. And then the 4th area is financial acumen. We feel like those 6 areas are core for any organization, regardless of sector, to really be able to have a catalytic growth and transformation at whatever they're trying to do. So I just wanted to put that out there, that many investors do significant work, but the bulk of what DRK is known for is how we help the organizations move. So for example, I mentioned Common Market. They came in under $1 million. they left and they were having a $30, $40 million year, and we're then able to have develop a portfolio of funds that they can now reinvest into the organization's missions and models of vulnerable farmers and families. So I just wanted to add that as a context of how do we really get to catalytic investment and support. And it's not always financial, and most people assume if I had the money, my issues would be solved. But having the money is just a beginning of the problem. Your biggest problem will always be people, partners, investors, or your team. Hate to tell you that.
Yeah, I think that's a great point, especially in early stage investing. That there's a reason that it's sort of a cliche that team comes first, and I think it should always be sort of your first slide in your deck because we are investing in people. I want to turn the conversation a little bit. I think we've actually done a good job of touching on supply chain solutions, some food rescue solutions, even B2C with Mill. But one area we haven't really talked about is waste valorization. And we love to say at FTW that you can make everything from waste except money. And so, but obviously that's not true, and there's a lot of opportunities there. But I think one of the things we've found is an issue with the folks that are going after, what do we do with all the coffee waste out there? What do we do with all the brewers' waste out there? Is that they're going after waste first instead of looking for the end product that they're making with it and finding that demand on that side. So we have no doubt there's a ton of waste out there, but what can you actually make of it that's a high value product? So I don't know if anybody has looked into this area. I think one great example of a company that's looking at this would be Crush Dynamics. They're taking wine waste, which is high in polyphenols, and they are making an ingredient that can be used in product formulation to lower sugar and salt content, which is something that, if you know anything about CPGs, most of the CPGs are making promises to lower their salt and sodium contents by 2025 or 2030. So they're solving a real problem for the CPGs, and they're using a real waste product as well. So I'd love to hear if the panel's seen any other solutions in that space that they are excited about.
I'm going to go first, if you don't mind, Ida, because we get tons of deals and we don't invest in the space.
It's a hard one, and I mean, you nailed it with, people are not willing to pay for something because it's good for the world. They're just not. Some people are, a few people are. The majority of people are not, and so you have to have a really good product. You have to be solving a real problem. It has to have value beyond, look what we made, right? So I'll give one example, Barnana. We make plantain chips and dried banana bites, and they're really good. And it's a great snack. And I should be able to sell that as a great product. And by the way, it's upcycled, and you're actually sourcing from this incredible cooperative of farmers in the Amazon. The supply chain is insane. If you ever want to talk about it, find me after. And that sells to some people, but most people would like to eat some good chips, right? So how do we figure out how to do that really well and then scale it? When I talk about Hawthorne Food Ventures, I normally say we look for companies that either as their core value proposition or a co-benefit of their solution are solving food waste, right? There's kind of those two levels. And there aren't as many companies who are at that first level of what we're doing is a pure food waste play, right? The second category is much bigger, and I think that's really how you get to scale. And that's why food waste is both a big challenge and a big opportunity, because there's all these things we can do that solve food waste. It's almost like a distraction, right? You didn't even know you were doing that. You were just eating chips. We got to do more stuff like that. And so I think to your point, Jen, it can't be the core value that we are turning waste into something. It has to really be a product or a service that people need. And then trying to simplify that, I think, is another part of it. Because when you're scaling, the simpler it is, the easier it is to scale.
I want to go back to, Jen, what you were talking about with how Closed Loop thinks about impact. And I'm curious if, especially in food waste, we've run into some questions about if I'm looking at something in food waste that's related, for example, to the meat industry, but we're trying to reduce our carbon intake. Is it against our impact metrics to invest in something that makes the meat industry more efficient? So I'm just curious if you could talk a little bit more about how Closed Loop thinks about impact when they're making investments, kind of across the board.
Sure, happy to. So I'd say the gold standard when we think about impact metrics are the two that I just mentioned earlier. It really is diversion from landfills and then calculating from that what are the GHG or methane emissions avoided or reduced. I think it's going to be really hard to change consumer behaviors, and we try not to focus on that when we think about, financing and backing projects and like meat related or not. And so it really just comes down to those two core components. I think there are secondary impacts that we obviously want to monitor, and that comes with upskilling, job creation, economic development, and I think a bigger part of it is really folding into all of this is EJ. So a lot of what I do on my day-to-day basis right now is to look at recycling infrastructure, again, for mainly plastics and packaging materials. But there are lots of detriments to some of that and where those facilities are currently based. And I think as we continue to build out our thesis for making investments in infrastructure type projects and providing project-based finance, this becomes a much bigger part of what we're doing, right? It's no longer just environmental metrics, but it's social, and it's also more broad than that. When we think about environmental, I'm also very concerned about water resources, and that has a lot to do with what I look at today, but there's obviously a big connection between ensuring that we're reducing food waste and loss as it relates to water.
Just want to give everyone the heads up. We have about 10 minutes. No, I don't have any. 10 minutes before I'm going to start turning to you all for questions. So please do start thinking about questions that you might like to ask the panelists as well. So Ida, since you're a market rate investor, I'd love to hear a little bit more about what type of returns you're expecting for those that aren't as familiar with the venture model, and how that might limit what you can and can't invest in.
Yeah, so I'll speak in some general terms because, of course, like every transaction is different, every company is going to be different. But I think to compare it with what I'd say the broader venture market that's largely going to be software focused, and again, we're dealing with food, we're dealing with infrastructure, and even though venture is not always investing in heavy infrastructure, that's a core part of it, right? So it does look different. And I'd say from a portfolio approach, we're not necessarily looking for 100 companies with one unicorn and the rest are zeros, right? We think we're going to have a smaller portfolio, probably 12 to 15 companies. And we think there's, going to be a few singles, doubles in there, and then a couple home runs, we hope. But the return profile does look a little bit different. And for that reason, our diligence process is a little bit more focused on longer term relationship building and really getting to know a company and a founder for a little bit of a longer time, and having that longer term partnership approach, right? So it isn't as kind of, I'd say sometimes venture feels a little breathless and like you're just chasing, and we're trying to, again, think about, we're working in food and ag. We're looking at growing cycles, and you have to really consider that pace and the pace at which decisions are made. So, I tend to use the term market rate as a more general term to really signal that we think that these are great businesses and can stand on their own, and the impact is core to what we do, right? So we invest in companies that are solving food waste and promoting human, environmental, and financial health, right? So that and part of it is critical to our investment thesis. But we do want the business to be able to stand on its own. And so to come back to the mill example, you are designing a food recycling system with decentralized infrastructure that can scale up and down in a way that makes sense for how the company is growing. And then the lift is really that consumer behavior and the data you're getting off of these devices, right? So it's a way to invest in a recycling solution with infrastructure that has this upside of like deeply understanding the consumer problem that kind of comes back into the flywheel. So I'd say it's, again, thinking about what does venture look like in food and ag and kind of taking that more patient, we were talking about patient capital, right? Even in venture, it's taking that more patient approach.
Yeah, I think we have a similar philosophy on not expecting to have $1 billion unicorn and the rest failures. We definitely think also about our portfolio, hopefully having very few, if any, that go out of business, a few ones and twos, and maybe a fund returner. And to just give you all a little bit more context, we actually underwrite or we have to tell the story to underwrite all of our investments to a $250 million exit. Traditionally, you would hear $1 billion in sort of software venture capital. So we do 250 million. And the other thing is that because of that, we are very valuation conscious at the pre-seed and seed level. If you're already valued at 100 million before you've even had any revenue, we think it's going to be really, really challenging to get the returns that we need without getting super diluted, especially if you're a CapEx intense business. So our entry point is really important too. So we like to be really upfront and open with our founders. If your valuation, since we're pre-seed and seed, is higher than 15 million, we just can't play in that space. And it doesn't mean you're not going to be a great business or be able to raise from someone else that's less valuation conscious. But it's just something to keep in mind when you're talking to investors, if you're a startup, that you understand where their motivations are and what their sort of return expectations are for themselves and for their investors as well. So I think, did you want to add something?
Did you want to talk about your return
Ours is
expectations?
pretty similar.
Okay.
Ours is pretty similar and spot on. Our valuation sensitivity is 10 million. So it's everything she said, ditto, echo. Yeah. So I know you wanted to share.
Yeah, I'll just share that during the intro it was mentioned that I'm looking at both catalytic debt and equity. So we do have sleeves within some of our funds to make earlier stage equity investments. And what we're looking for there is really more on the impact side, right? So we're using that sleeve to invest in technologies that optimize a specific value chain. On the debt side, our goal is always to provide below market rate financing, right? But the idea is not to provide just financing, it's more broad than that. It's partnership, it's connection to other stakeholders that are within the closed loop partners ecosystem to help scale. And so that below market rate capital becomes pretty important for companies to navigate, especially given the companies that I look at mostly today. There's a lot of volatility around like commodity market pricing cycles and whatnot. And so being able, again, to be flexible and creative with these structures is critical.
Last thing I'll say before I turn it over to you all, if there's any audience questions, is kind of what you were just talking about is why I like investing in this space. I think before I got into venture capital, I'd heard the term vulture capitalists before, and there's definitely a negative connotation. But I think that all the investors that we tend to try to bring around the table are trying to add value to these startups, to make connections. We have a lot of strategic investors in our fund that are big CPGs and high net worth individuals that started companies like Toast or like Oatly and really care about making the food system more efficient and better. And so I think it's actually a really collaborative place to invest in, and that's been really fun.
I want to jump in, and I don't know how you all feel in your organizations and what your investment thesis is around this, but DRK rarely comes in as a lead investor. We will come in with like-minded partners. However, for us, we're really looking for organizations where their investors and their boards are focused on impact, direct impact at scale, and focused on the people and problem and planet, and less focused on profitability. We presume that profitability will occur and the ROI is significant for impact, but we are also conscientious. So if you have investors that we think aren't mission and value aligned with what you're trying to do and what we're trying to do, we will not engage, because there are sharks and whatever word you used, vultures out there, and we don't want to engage in that way because we're deeply focused on direct impact on your model. So I don't know if you all are positioned similar, but I think it's an important point in how they build their portfolio of investors.
And we heard it this morning, right? When you take money from someone, that's a partnership, and you're with them for a long time, right? You're in it. And I think what the past couple of years have shown with the broader macro trends in the market, people have had to be in tough situations, and that's when you really figure out what everyone's like, right? And so it is so important to really be thoughtful about who you're working with at every level. And I think, so we think about this question of lead versus follow quite a lot, and yes, there's a financial reason to lead and to have a bigger role, but we also think there's a gap in people leading in this space, right? So again, why are we here? We want to get this done, we want to do this, and so that requires leading, and venture by nature, you're going to have your lead investor, you're going to have a number of follow-on investors, we love to play that role as well, especially in a place where there isn't someone with food waste expertise. But we do think that, leading can be really valuable. We're coming with you then. Amazing. And this is why we do this, right? We want to bring other funders in.
And I would agree, leading is important because it sends that market signal, right? And so if you don't have catalytic capital or like those that are willing to take earlier stage risk, it becomes very hard to crowd in more mainstream investors that will question the ROI of a specific investment.
And interestingly, we've found that generalist climate tech investors are not leading as much with food waste and food-related investments. So that's where we really feel like we need to step in.
Yeah, and just to clarify, the reason we don't lead is because of the size of capital that we give. No one wants a $300,000 lead. It's just not good news.
Okay, I'm getting the time for Q&A sign. So if you do have any questions, there's a mic in the middle if you want to stretch your legs and come to the mic, or you can just raise your hand and Alejandro will assist us with running the mic. So are there any questions?
Hi, I'm Bruce Rosner at Green Life Tech. I have a question for you. I know your level, 300,000. What are the other levels if you're initializing first rounds, seed rounds, and so on? What levels of investment?
So our initial checks can be 250 to $1 million.
Ours are exactly the same, 250 to 1 million. 250 to 500 is usually our pre-seed. 750 is our average, and then 1 million is sort of for our the ones we're most excited about at the seed level. We are co-invested with Closed Loop with the venture team. I don't think, are we co-investors? I don't think
yet.
So. Not yet, but we will be.
But our fund is, we just hit a year, so we're give us a little time.
Yeah, so today, again, my team does not focus on food ag, but I'll speak for like the ventures group. So I'd say check sizes are very similar, 250 with reserve for follow-on. On the lending side, today, that's probably like in the $3 to $5 million range. I think when we raise our next fund, it will be larger than that, given the CapEx intensity of some of like the composting and AED solutions that are required and require backing.
Actually, at the mic right here, yeah.
Hey, I really enjoyed the conversation. Thank you all for being out here. My name is Eamon. We're Rubbish, and we do AI for waste management and food recovery. My question to you is, how do the agreements differ in the food recovery sector versus traditional venture, like SAFE agreements or convertible notes or loans? What does the mix look like compared to standard venture?
So I think it depends not so much if you're food recovery or not, but if you're going after market rate investors, then you would have the same types of structures where we will do SAFEs, convertible notes, or equity rounds. We're agnostic on that. So we're open to all of the above. If we can tell the story about you having a large enough market size, solving a real problem, and a team that we want to back, then those are sort of the three check marks we have to hit to present with a term sheet for one of those three instruments, but we're fairly agnostic on which one.
And I would say I don't actually know any investors that make that distinguishment by sector, right? The financing form is really around the type of risk appetite and the return expectations. So you should not have someone offering you something different just because you're focused on a specific sector.
Yeah, I think in food rescue, there's a couple startups that have raised, I think, some venture dollars, which includes Brightly is out raising venture dollars. They do carbon credits related to food rescue, and then Gooder is another one, and Too Good to Go maybe you would count as food rescue, maybe not, but those are some examples of folks that have looked for traditional venture instruments.
Hello, this is a question for Jennifer. You talk about catalytic capital a lot, and ultimately the goal of catalytic capital is to bring in, mainstream commercial investors to the table. Can you talk about how you can work in collaboration as a catalytic capital provider? How you can work in collaborations with other impact-minded food waste investors like EDA and yeah.
Happy to, and thanks so much for the question. So maybe I'll just speak about it more like from a sector agnostic perspective, because again, the catalytic capital piece is more of a financing and structuring approach. So we're often co-investing with like-minded investors, right? And really the goal is to be more flexible in the terms that we would be willing to accept to crowd in those other forms of capital. And I think a great example would be one of our portfolio companies that's in the Minneapolis area. There are strategics that are a part of that. They have a different cost of capital, and so we're requiring, both on the equity and debt side, just had different return expectations. And so we extended out the term of our loan, deferred P&I payments, and helped to reprioritize how the cash is flowing from the business to the respective investors to help accommodate some of those return requirements, if that makes sense. And I wouldn't describe what we do as being first loss necessarily, but we have the ability to be very accommodative, and I would describe us as being very borrower friendly. Does that answer your question? Yeah. Okay, great.
Y'all touched on valuation a little bit. I'm just curious how, if you could elaborate maybe on criteria that you use to look at impact or catalytic investment versus, other investment, and what is the core criteria that you're using to determine valuation with your companies that you collaborate with?
I can offer a few thoughts. The annoying answer is going to be it depends on the company, right? And it's really true. And what I view my job is to learn, is to go and deeply understand a sector and a problem and the people and the team, and that's all part of it. And the team is so critical, right? And especially with early stage, you have to have confidence that the people you're investing in are going to be able to figure out this problem and people you want to work with. I think if we're talking about, and so we don't do what I would, the defined term of catalytic capital, because I think that is a defined term, right? So it can be hard when you're trying to, do evaluation to find your comp set and think about, what are we benchmarking this company against? I think we take a little more of a conservative approach and try and be, again, like the timescale factor is so important here because you can't benchmark a company that's going to grow slower against one that's going to have an exit on a much shorter timescale, right? So that timing factor, I think, plays a bigger role in the food and ag world than maybe with like a pure software play. But yeah, I would say it's just being really eyes wide open with what's the field you're in, who are the people you're working with, and also like having humility with not thinking, because you've done this many transactions before that you know more than you know about what's sitting in front of you.
I honestly think at the pre-seed and seed level for us, it is fairly formulaic. You can do an exit analysis and model out the revenues and model out comps, but oftentimes these companies are pre-revenue, so it's really a lot of guesswork. So for us, we're looking at what the market says for companies like you raising right now in your space, and I would say our seed checks really only our pre-seed checks really only deviate between 4 and maybe up to 8 million, and our seed 8 to 12 is kind of where we are right now, maybe 14, 15 a year or two ago. And the difference in that where you are is it about your traction? If you're a pre-seed company that is literally just an idea, then you're going to be on the lower end. If you have a prototype and maybe even an LOI, then you're at the higher end. If you're a seed company and you have revenues, then on the higher end. But if you just have an LOI, you're at the lower end. But there's not a whole lot of deviation besides that. And I will say that venture capitalists do tend to be very FOMO driven as well. So if you clearly have a lot of interest around the table, then your valuation will probably be higher than if you don't.
I would add, the two things I would add is we do look at capacity to scale, and we do a market analysis and market landscape to see where are you, how competitive is it, how are people growing and evolving, and how are you differentiated from others in the market. So capacity to scale, we kind of try to calculate and generate, and then if we believe you can get there in a timely fashion and we can see a certain amount of exponential growth over the first 3 years, then we're inclined. But everything we do is direct impact focused. So I just want to add the non-financial component of what helps us make a financial decision.
Thank you, panel. In particular, appreciate the aspect where you said, what problem you are solving related to food waste, because one lesson for me, I'm with MetaFood X, we actually have a solution to help the operation of the food service, right, to make it efficient, sustainable. At one point, we know we are great at prevention, but when we talk about food waste prevention, people start asking, when I stop the waste, do I still need you? So really appreciate that insight. So my question is, I know you mentioned, right, at least DRK mentioned, indeed, most of the time, because of the amount of capital, you don't lead around versus helping making a deal happen, right, can be two different things. So I want to hear the panel's basic advice, right, in this case. How do you go about some of the critical conversation and to get someone to help you to get the ball moving, not necessarily leading in capital? Thank you.
Yeah. If we see an interesting organization, I should contextualize this. We get 2,000 to 3,000 applications annually, and we invest in 18 to 20 orgs, and only about 4 of those are in food and ag. But in general, if we see a very interesting organization that we think has significant promise, and it's at the right stage for us, we help you find a lead. We will go into the market. We will talk. If you're local based, we'll try to find some regional investors. We talk to others that are working in this space, and we ask them to come in with us. So it's not just that we won't lead. If we're invested and we believe in what you're doing, we will dig in. We'll have you talk to our finance folks, our fundraising folks on our team, and have strategic meetings with you to figure out how to get you there. I should also talk a little bit about managing expectations. We don't want to keep the lights on, so we are catalytic in a sense. If you don't have enough, like a significant enough burn rate and cash on hand, if you don't have 6 to 9 months, we're most likely not going to invest in you. Our concern is that we don't want to just sustain your organization and keep you moving. We really want to see massive transformation. So sometimes we're really excited about an org. They don't have a lead and they don't even have a lot of cash on hand or significant enough runway to even make it through our diligence process. So we're going to work with you strategically if we believe in you. And even if we can't fund you, we're going to try to give you as many tools, resources, and guidance as we can to move your needle forward. So I want to add that in, that we'll help you find a lead if we can, and we believe.
Yeah, agreed. I think that's part of, again, the job of being an investor is thinking about, we all see a lot, but we all can't see everything. So we rely on other people to share information, share opportunities, and I think that is, it's a goal as well, is to connect people with people who can help them.
And I think depending on what your startup is, there are non-dilutive capital options. Especially, we look at a lot of like university technologies that are trying to get into market, and there's a lot of grant opportunities there that we'll point you to. There's accelerators that can be low or non-dilutive that can be really helpful in telling that story and getting that syndicate together where then we're ready to participate even if we want to lead. Sometimes we want to make sure you have the capital in place to get at least 12 months of runway. So yeah, if we like the founder and the team and think you're solving a real problem, we also will try to help you to get to that position where we're ready to invest.
Okay, and so with that is the end of the panel. First of all, I want to give a big thank you to the panelists that we have today. We at ReFed hope that this was a nice window into how funders are thinking about investing and looking at the space. The next session that we have today is going to be the Solution Showcase, where you'll end up hearing from 3 different companies that'll present their solutions, and then they'll receive feedback from the judges, which actually happen to be some of the members that are up here today. Thank you all, and next session begins at 2:30.